1. The hidden clues in the XRP price chart. If you zoom out on the XRP price chart, it tells a story most retirement investors never take time to read. From 2013 to 2025, every spike, crash, and recovery isn't random. It's rhythm. This isn't just about volatility, it's about a pattern, a cycle. And that cycle repeats with frightening precision. In 2017, XRP exploded. In 2018, it crashed. In 2021, it rose again, but under legal pressure. Now, in the post-clarity era, the chart is whispering something only a few are listening to. Most people look at price as emotion, but retirement planning demands logic, data, strategy. When you recognize the hidden clues, the quiet accumulation zones, the institutional buying trends, the volume spikes before rallies, you stop reacting and you start positioning. Because here's the truth. Those who study the cycle don't just survive it. They capitalize early. They buy when others forget. They prepare when others panic. And when the next wave comes, they're already in, not chasing. For anyone building an XRP retirement account, this chart isn't noise. It's a map. It shows you where fear became fortune, where hesitation lost to preparation. And most of all, it proves one thing. Opportunity doesn't knock. It pulses again and again for those willing to read between the candles. 2. The 2017 breakout and explosive growth. 2017 wasn't just a good year for XRP, it was historic. From under 1 cent to over $3 in less than 12 months. It wasn't gradual, it was explosive. For many, it came out of nowhere. But those who paid attention to the fundamentals, Ripple's partnerships, the early adoption signals, were already in before the crowd noticed. This wasn't just one of the fastest rallies in crypto. It was one of the most compressed wealth moments in financial history. And yet, most retirement investors missed it. Why? Because they didn't believe, because they didn't plan, and because retirement portfolios weren't ready for digital assets yet. But imagine this. If XRP and IRA structures had been available then, even a $1,000 allocation inside a Roth IRA could have grown into 6 figures. Completely tax-free. Not speculative trading. Not risky leverage. Just early positioning inside a tax-advantaged retirement structure. This is the power of combining exponential assets with long-term thinking. This is what Crypto IRA XRP offers today. The ability to ride the next breakout not as a gambler, but as a strategist. 2017 is gone. But the pattern isn't. And if history rhymes, those who prepare now may be writing their own version of the 2017 story, inside a fully compliant, protected XRP retirement account. You don't need to guess the top. You just need to be in before it begins. 3. What 2018 crash taught smart investors. Let me take you back to 2018. XRP had just reached over $3. Then it fell. Hard. More than 90% of its value was wiped out. For many people, that was the end. They called it a scam. They walked away. But the smart ones? They stayed quiet. They watched. They studied. What they saw was something different. Wallets, large wallets, started buying slowly. Ripple, the company behind XRP, didn't stop building. In fact, it signed more banking partners than ever before. This is what retirement-focused investors understand. Growth comes in cycles. And in every cycle, there's a crash. But after every crash comes opportunity, if you're prepared. That's the key word here. Prepared. Not emotional, not reactive. Just steady. If you had a crypto IRA XRP back then, or even just the mindset of long-term planning, that crash wouldn't have scared you. It would have taught you. Because pain refines patience. and patience builds wealth. This isn't about trading, it's about time. It's about putting XRP into a retirement account and letting it do what it's always done: move through cycles and reward those who wait. 2018 was a lesson, not a failure. And if you listen carefully, it's still teaching, but only to those who are willing to learn. 4. The long winter, 2019-2020. After the crash of 2018 came something even harder to endure: silence. 2019 and 2020 were cold years for XRP. No big news, no hype, no headlines. Most people left. They assumed XRP was finished. But here's what they didn't see. Behind the scenes, Ripple kept building. They weren't chasing headlines, they were building infrastructure. More banks joined Ripple's network, more corridors opened. The foundation got stronger. And while the market was quiet, some people stayed. Not speculators, not short-term traders, but long-term thinkers. People like you, planning for retirement, building slow, holding steady. If you had XRP inside a crypto IRA during those years, you didn't panic. You weren't watching the price every day. You understood that wealth isn't made in the spotlight, it's built in the shadows. Those 2 years, they tested character. But they also rewarded patience. Because by the end of 2020, XRP moved again. And those who stayed didn't just survive, they matured. That's the difference between a speculator and a retirement investor. One chases, the other prepares. And preparation, even during a crypto winter, is what builds peace of mind and long-term value. 5. The 2021 revival and legal shadow. Early 2021 brought a spark. XRP, once quiet, started rising again. Momentum returned. People noticed. But then, the SEC stepped in. A lawsuit. Headlines. Fear. Confusion. Prices jumped. And then stalled. While other coins soared freely, XRP was pulled into a courtroom. And just like that, the excitement turned into silence again. But this time, it wasn't about failure. It was about waiting for truth. This was no longer a question of price. It was a test of clarity. Legal clarity versus market hope. Many short-term traders panicked. They sold. They moved on. But retirement-minded investors, they stayed alert. They knew this wasn't over, just delayed. Because legal battles don't change the fundamentals. They slow things down, but they don't erase real value. Ripple kept building, partners didn't leave, and those with XRP in a crypto IRA understood something most didn't. Temporary noise doesn't shake long-term conviction. Retirement is not about chasing hype. It's about choosing what to hold when the world gets loud. And in 2021, those who held XRP, quietly, strategically, showed the difference between guessing and planning. 6. Post-2023. Clarity and awakening. 2023 changed everything. After years of silence, tension, and legal fog, a federal court finally spoke. XRP, when traded on public exchanges, is not a security. 3 words. But for retirement investors, it meant freedom. This wasn't just a win for Ripple. This was a win for everyone watching closely, patiently, through the legal storm. It meant that holding XRP in a retirement account was no longer just a smart bet. It became a confirmed path. Suddenly, XRP wasn't just a hope. It had legal clarity. The one thing most digital assets still don't have. And for those who had already set up their XRP Roth IRA, that moment felt different. Because now, what they believed was validated. What they held was recognized. And what they planned became possible. When clarity comes, doubt disappears. And in investing, especially in retirement, clarity is everything. From that point forward, the story changed. XRP was no longer maybe. It was approved, active, real. And that's when the quiet investors smiled. Not because price moved, but because the foundation had been laid, and they were already standing on it. 7. What history says about the next move, look back. Every time XRP fell, it came back stronger. Each crash brought a higher low. Each rally built on a firmer base. This isn't hope. It's history. And the chart doesn't lie. For those planning their retirement, that chart tells a simple truth. Cycles are real, and timing matters. Right now, XRP isn't at the top. It's not in the news every day. But that's exactly what makes this phase so important. Because if past patterns hold, and so far they always have, we may be nearing the last true early access moment. The window before headlines come, before FOMO hits, before the price gets away. Retirement investors who position now, carefully, quietly, inside a crypto IRA XRP, won't need to chase later. They'll already be in. No stress, no rush, no regret. This is how real retirement wealth is built. Not by reacting to news, but by reading the signs before the world does. And the signs are speaking. Clearly. 8. Long-term strategy for retirement. This isn't about chasing the top. It's not about getting rich overnight. And it's definitely not about guessing when the next big move will happen. Retirement doesn't work that way. Real strategy means preparing, not predicting. And for many, using XRP and Roth IRA retirement plans is exactly that. A smart, steady approach to long-term growth. XRP isn't always calm. It moves fast. It shakes out the impatient. But that volatility, when placed inside a retirement structure, becomes an advantage. Why? Because you're not trading it daily. You're not panicking on the dips. You're holding it with purpose and with time on your side. When you use a crypto IRA XRP setup, you're doing two things at once: protecting your gains from taxes and giving the asset space to grow without pressure. This isn't about finding the perfect entry. It's about already being in when the market finally turns, and the market always turns. Smart retirement investors know you don't wait until everyone else is excited. You build your position when things are quiet, and let patience do the work. This is how you turn years into impact. Slow, steady, strategic. 9. How much is enough? The 5% lesson: you don't need to go all in. You don't need to bet the farm. History proves that sometimes, just a little is more than enough. In the early cycles, even a 5% crypto IRA XRP allocation produced results most people only dream about. That's not theory, that's math. XRP went from under a penny to over $3. Even a small slice of your retirement account, positioned early, could have created a lasting impact. This isn't about risk. This is about exposure. Because smart retirement planning isn't about chasing maximum returns. It's about balancing upside with stability. And XRP, with its track record of breakout growth, offers exactly that, especially when placed inside a tax-advantaged structure like an IRA or Roth IRA. 5% won't shake your foundation. But if the next XRP cycle plays out like the past ones, it might just accelerate your retirement goals more than any bond or dividend ever could. That's the power of asymmetric opportunity. Small input, large potential. So if you're wondering, how much is enough? Remember this: it's not about how much you invest. It's about when and where you place it. 10. The past is calling. Are you listening? Retirement isn't built on luck. It's built on foresight, on choices made early while there's still time to choose. And the past? It's been speaking all along. XRP's story is one of cycles, highs and lows, noise and silence, fear and reward. But there's one pattern that keeps showing up. Those who move early benefit most. Today, you're not guessing anymore. You've seen the chart, you've heard the history, and now you know what's possible. So the real question is, will you learn from what came before, or wait and watch it repeat? Adding XRP in IRA today isn't a risk. It's a response to the data, to the patterns, to the fact that real opportunity rarely feels urgent until it's gone. Retirement planning is about positioning, not chasing, not hoping, just being ready. And right now, you still have the one thing most people don't: time. So listen to what the past is saying. Don't wait for the headlines. Don't wait for everyone else. Make your move while the door is still open.